Come on, macro analyst. Let's go. There he is. Okay, perfect. Let me know how the audio quality is on X and on YouTube. Let me check. Looks like X is fine. And we're about to get our report. Good. On YouTube as well. Thank you very much for those of you who let me know. All right, let's get started. Let's see. Overall markets are up. Dow Jones up 0.4%. Nasdaq up 1.7%, and S&P 500 up 0.8%. So generally, up markets today. Russell 2000 down. Russell 2000 down. So this is just pure volatility in Max 7 companies that is driving the stock market up or down. Historic concentration levels on top 7 companies. Apple up about 4% today. Nvidia is up about 6%. Microsoft 2, Meta 2, Amazon 2, Google 1 to 2%. Tesla is down, and that's on the back of GM. I believe that's due to GM report that came out today. GM stock is down 9-10%. It was down as much as 11% at some point. 5x PE ratio for General Motors. 5x PE ratio, which is stunning. Um, we're going to talk about the GM report. We're going to dig into that, see if we can get any color for tomorrow's report. On semiconductors, Nvidia is up 6%, but Broadcom up only 1%, and everything else is down. AMD is down, Texas Instruments, Micron, Intel, and Analog Devices also down. Microchip Technology is down, NXP is down. So Nvidia is the only one that's up, other than Broadcom's kind of flat, which is really interesting. That is a really interesting development, I think. That the entire AI hype bubble topped yesterday, including Nvidia down, 17% on top of, I think, the 4 or 5% before that, the day before. So 20% down, and Nvidia is up 6%, which means obviously, you're down about 15, 16% from the top again. And that's the only one that bounced today, which is really interesting to me. But I've been doing a lot of research into Nvidia, and I'm highly confident, though I may be wrong, that I think the intrinsic value of the company is way lower than where it's trading today. And we can dig into that. We're going to dig into that at some point today too. So we have GM earnings, we have Nvidia talk, and then we can talk about Tesla upcoming earnings as well. All right. If ACDC is available, he's welcome to come up. If not, I'm going to read some articles here. We also got some financial reports today. Durable orders down for December, down 2%, 2.2%. It was expected to be up 0.4%. And then durable goods, ex transportation, down, up 0.3%, but it was expected to be up 0.5%. So both of those metrics came in lower than expected for December. And then for January, consumer confidence came in lower than expected, 104 versus 108 expected, and 110 prior. So consumer confidence has declined. Oil price at $73 per barrel, low. Natural gas prices came down, so the winter is over in the natural gas market. And treasury yields are up about 4 basis points today. Treasury yields are up about 4 basis points. All right. Let's see. There's a lot of earnings reports coming. JetBlue also down 27%. JetBlue down 27%, which is a travel stock. Lockheed Martin down 7%. And we talked about GM being down 9%. Also, on the travel side, however, Royal Caribbean up 12%. Royal Caribbean is trading at record levels, and I'm looking to short it, but I'm not sure yet. I need to do more research. If I do, I will let my subscribers know first because now you can subscribe to the channel for $5 on X. X finally adjusted my subscription price, so that's great. ACDC, how are you?
I'm good, yeah, man. How are you?
Good. What do you make of? What do you want to talk about? GM, Nvidia, Tesla, or something else, or macro, or something else?
Well, just one thing I just kind of wanted to add, like when you were talking about some of the earnings coming up, and I think you were also talking about the market rebounding back, the top-heavy market. I read some interesting stats here. We of course know that the market is really top-heavy with the Mag 7 right now representing about 33%, I think, of the S&P 500. But the earnings, when people usually quote these earnings, they'll always quote these earnings for the S&P, earnings growing year over year, market's great and everything. But when you dissect those earnings, it's pretty alarming to look at the breakdown of these. So there's an expected consensus on earnings growth of about 12%, 11.6% or so on the S&P fourth quarter earnings. Okay, out of which 39% of that overall earnings growth in the fourth quarter is going to come from the Mag 7. And then if you dissect that even further, out of the Mag 7, you've really got two companies which are carrying the heavy weight. NVIDIA, expected earnings growth of 61%, and this is past, and Amazon at 50%. Next, after that, you're looking at Google at 27, Meta at 24, and then that's it. You've got Tesla at 10% earnings growth, Microsoft at 6, Apple is 4. So it's even a lot worse than you actually think. Here's these few companies which are really driving the narrative of the earnings growing on the S&P as a whole, and now you're seeing some of the stories on those earnings growth also crumbling, even though I think Amazon will still be okay, driven more by macro events or so. So it just tells you that this is a very, very top heavy market in spite of this correction, and people are still willing to take the risk, and the greed is still back in.
All right, thank you. Yeah, I agree. I agree with everything you said. Um, so you're a value investor. Would you buy Apple here? It's been running quite a bit after big pullback in the stock.
I wouldn't. I don't really see a catalyst in it. I think people are kind of jumping to it for one, the safety, you know, of Apple, consistent kind of earnings, huge cash position. But I really don't see a catalyst. One perhaps could have been the talks about edge computing into mobile devices and stuff. But I mean, come on, we're talking about a company which is barely figuring out AI right now, let alone get to a completely new product cycle of AI computing devices. So I don't see a catalyst. I wouldn't be a buyer of it.
Yeah, yeah, interesting. I mean, I kind of get the argument of what DeepSeek did is going to accelerate Apple intelligence a little bit, but I just don't know if that necessarily means Apple is going to be the primary beneficiary of this. Like why wouldn't Samsung benefit?
Well, exactly. Or like a Qualcomm. Okay.
Yeah,
Qualcomm actually has more advanced chips. Their new Snapdragon Elite is already able to handle that. They're able to place that chips into, I think, mobile devices and PCs in that environment. So they and that's a chip that you can put into many devices out of the Apple sphere, the iOS sphere itself. So yeah, I think people are just kind of like getting ahead of it a little bit.
Yeah, I agree. What do you think about the weakness in consumer confidence that came out today?
I think that's going to continue. That to me is going to be the biggest challenge as to how, and I think it's through tax cuts really, how Trump can actually provide relief to the consumer because the consumer's going to continue to battle this inflation. This is not going to go away, and the tariffs are also going to add some pressure to it.
Yeah, consumer confidence. Let me see if I can find the history of this thing. Consumer sentiments, confidence, the consumer conference board. Okay, let's read through this a little bit. Let's do a bit of a macro before GM and then Tesla. Consumer confidence survey by the conference board reflects prevailing business conditions and likely developments for the months ahead. This monthly report details consumer attitudes, buying intentions, vacation plans, and consumer expectations for inflation, stock prices, and interest rates. Data are available by age, income, 9 region, and top 8 states. US consumer confidence retreated in January. This was published this morning. Consumer optimism about both present and future conditions pulled back. The consumer confidence index declined by 5.4 points in January. December's reading was revised up by 4.8 points to 109.5, but was still down 3.3 points from the previous month. So this is 2 months in a row. Consumer confidence dropped. Present situation index, based on consumers' assessments of current business and labor market conditions, fell sharply in January, dropping 9.7 points to 134.3. So present situation fell sharply in January. Expectations index, based on consumers' short-term outlook for income, business, and labor market conditions, fell 2.6 points to 83.9, but remained above the threshold of 80 that usually signals a recession ahead. Interesting. So it's very close to it, but it's still above it. That's very interesting. And the expectation index, as we know here, is now lower. 83, 88, about 84 versus 134 for the present situations. Okay. The cutoff date for preliminary results was January 20th, 2025. Okay. Consumer confidence has been moving sideways in a relatively stable, narrow range since 2022. January was no exception. The index weakened for a second straight month, but still remained in that range, even if in the lower part, said Dana Peterson, chief economist at the conference board. All 5 components of the index deteriorated, but consumers' assessments of the present situation experienced the largest decline. Notably, views of current labor market conditions fell for the first time since September. Oh, that's interesting. While assessments of business conditions weakened for the second month in a row. Meanwhile, consumers were also less optimistic about future business conditions and, to a lesser extent, income. The return of pessimism about future employment prospects seen in December was confirmed in January. Interesting. Interesting. Yeah, I think a really surprising theme this year is going to be the rising unemployment rate. I think we're going to see a consistently rising unemployment rate throughout this year. Happy to make a coffee bet if someone wants to take the other side. By age group, January's fall in confidence was led by consumers under 55 years old. Consumers aged 55 plus saw a small uptick in confidence. By income group, the sharpest decline in confidence was seen in households earning over $125,000. That's interesting. There's this rhetoric of how there's a income gap um, in the country, but I think that was true in the last decade or two. But in recent years, that income gap has really shrunk. I wouldn't actually say shrunk, but it's gotten smaller. And the people making lower wages have seen their incomes increase quite a bit. And I think, to the extent that some believe AI will replace some labor, it's going to start from higher income earners, especially like software engineers, etc. So, interesting development here. I've also heard that delinquencies in the higher income group is rising. Delinquencies in the higher income groups are rising, which is also really interesting. So I think this really matters for Tesla. So if this is actually true, now I don't know what the sample size is or what the sampling error is, etc. What the variance in the data is. I don't know that data, right? But if this is true, and now that we've seen this for 2 months in a row, a weakness in the confidence index by the conference board, um, I think that could also be one reason, kind of like GM stock dropping so much, etc. I think the other industry is going to be challenged, especially combined with high interest rates, and also true for the housing industry. All right, let's continue. Sharpest decline in confidence was seen in households earning $125,000, while consumers at the bottom of the income range reported the strongest gains. The confidence gap between the top income groups and those making between $75,000 and $100,000 narrowed. Okay, interesting. Peterson added, nonetheless, there were positive notes in other aspects of the survey. Consumers' views of their family's current financial situation were more positive, and 6-month expectations for family finances reached a new series high. The proportion of consumers anticipating a recession over the next 12 months was stable near the series low. These measures are not included in calculating consumer confidence index. Consumers also remained bullish about the stock market, even if a bit less so than at the end of 2024. Over half of consumers, 53%, expected stock prices to increase over the year ahead, compared to just 23% who expect the stock price to decline. Average 12-month inflation expectations increased from 5.1% to 5.3% in January. So that's going to be an issue for the Fed. The Fed started their meeting today. We're going to have the press conference tomorrow. So inflation expectations on the survey-based methods has been rising, although this is not really reflected in market-based numbers. Likely reflecting stickier inflation in recent months. Additionally, references to inflation and prices continue to dominate writing responses. More than half of consumers now expect higher interest rates over the next 12 months. The share expecting lower rates dropped from 28.5% last month to 23.9% in January. This is consistent with recent signaling by the Fed that the pace of interest rate cuts may slow in 2025, as well as ongoing increases in mortgage rates. On a 6-month moving average basis, purchasing plans for homes and cars were flat in January. More consumers plan to buy big ticket items over the next 6 months than not, but that share was down slightly. Consumer buying plans were flat for most appliances and still down for electronics on a 6-month moving average basis. I also see a similar trend in furniture, but that's my data. Separately, consumers continue to express intentions to purchase additional services in the months ahead, especially dining out and streaming. Vacation plans continue to trend downward at the start of 2025. Interesting. Vacation plans going to trend downward at the start of 2025. I need to take that note. Give me 1 second. This is as of 128. Vacation plans. Anything so far, ACDC, while I write this?
I agree with a lot of those numbers. But as you were talking about vacation plans, I'm watching Royal Caribbean up 12% in a day.
Hmm. And a record price at all-time highs, right?
Yep.
Um, I'm looking into it as a potential short. What do you think?
I think they could. It could work. I mean, these stocks will see a trailing effect, and these vacations are well planned ahead of time. So like people who are feeling the pinch, they bought these cruise tickets though and made plans like a year ago. So it's not quite reflected in the number, and I think these earnings are kind of near their top end.
Hmm. I mean, it's amazing. When you look at this stock, um, as of July 2022, imagine selling Tesla stock in early 2022 and putting it into Royal Caribbean. It's up 6 times after that. Isn't that crazy? That's crazy.
There's so many like that. I mean,
Yeah.
the world is big, and that's why you just have to look outside of the bubble.
But I don't think exactly. I don't think Royal Caribbean. Um, I don't think it's an industry trend. So they must be doing something right, kind of company wise as well. Let's look at their financials a little bit. Up 20% on revenue. This is September data though, so I don't have the latest data in front of me. Net income up 10%. $1 billion in Q3. Yeah, this is really interesting. I mean, this is very. It's a lot of variance in net income numbers. I'm sure there's a lot of seasonality here too. Net profit margin 20% in the last couple of quarters. I don't know what it is in the last quarter. Okay. I mean, I'm going to add that to my list of potential short ideas and then dig into it a little bit more. Royal Caribbean. Let's see. RCI. Just waiting for a recession confirmation. We haven't really had a recession confirmation so far. Some weakness here and there, but not a recession just yet. Okay, let's continue with do you mind if I continue with this? I'm really enjoying reading these things.
Definitely go ahead. One
Yeah.
quick question on
Yeah.
the recession confirmation. So usually in the industry, it's considered, you know, employment is one. It's kind of like a lagging indicator of a recession because it's only after the recession. It's like the tail end. It's like the companies cut human resource as the last resort. But I'm of the opinion that this is going to be one of those stories where the tail wags the dog, where I think the unemployment rising is going to be one of the factors that triggers the recession. What's your take on that?
Um, no, I don't agree with that. I think the unemployment rate is coincident indicator. I don't think it's a lagging indicator. But um but initial weekly claims, that's a bit more a few weeks before the U3 unemployment rate can show some signals, but it's also very highly volatile. So you kind of need to take an average of stuff in. Um, but I mean, there's so many measures of unemployment. It's crazy. There is the work week, wage growth, um, you know, hiring plans, job cuts. I mean, I read a note today that says something like maximum companies are hiring the least ever. Let me see. It was from Unusual Whales. Let me see if I can find it. Laid off workers are taking lower paying jobs amid a tough job market for white collar roles. That's one. I can't really find the other one. But so hiring plans are lower as far as I know. So And we've kind of seen this in the continued claims as well as we discussed here before. So there's definitely some weakness already in the job market as opposed to like versus last year and definitely the year before. So that's 2 years in a row of weakening job market, and it's at the brink. It's like so close to a recession, but it's not there yet. I don't think we're in a recession just yet. Like today, they revised GDP now estimate for Q4 to 3.2% from 3.0%. So, it's really interesting, though. It's interesting. Where do you think the unemployment rate finishes this year?
I think we could possibly touch 5.
Yeah.
What's your take?
Yeah, it's hard to gauge. It's hard to gauge. I think it's gonna be higher than 5, though. You wanna do a coffee bet?
Third quarter?
No, end of the year. Coffee bet. End of the year. Yeah.
No, I don't want to do one on that.
You know what? Okay, fine.
No.
I have a macro co-host when I do macro spaces, but he's not here yet. Maybe I'll do one with him. He would probably take me up on that. He's more bullish usually than I am. We're also not seeing credit spreads are super low, like super tight. Have they widened a little bit yesterday? Let's see. Credit spreads. Nope. So tight. They're so tight. Crazy. No sign of a stress here in the corporate bond market. Yeah. All right. Let's continue. Present situation. Consumers' assessment of current business conditions deteriorated in January. 18% of consumers said business conditions were good, down from 21%. 15% said they were bad, unchanged from December. Consumers' appraisals of the labor market plunged in January. Look at that. Look at that. Plunged. Interesting. 33% of consumers said jobs were plentiful, down from 37% in December. 16.8% said jobs are hard to get, up from 14.9%. I mean, I guess that qualifies for a plunge, but um, I mean, I get there you go. Like that's one indication, right? Of January, so which we're gonna get January numbers. I think this Friday. So today's Tuesday, 29th is Wednesday, 30th is Thursday, 31st is Friday. No, next Friday. We're gonna get next Friday. So let me see. So we might see an uptick. Yeah, I think we might see an uptick in unemployment rate in January. So next Friday we might kind of know that a little bit. Okay, so let me see. Give me 1 second. The U3 rate was 4.1% last month. I think it's going to be 4.2% this reading. Yeah, let me see for a second. So let's make that prediction and then see if we okay. So coffee bet. I do coffee bets with myself sometimes when I can't find someone to take the other side. 1 second. Yeah, yeah, this is really interesting. Really interesting. Um, one sec. Okay. Yeah, I don't see how it can be 4.1% again this month. So, oh, Fo is here. Let's see if he wants to come up. Um, okay, here we go. Okay, great. Oh, we have I don't know who this person is. Request to speak. Yeah. Okay, let's continue. Present situation expectations index. Expectations are low. Present situation is declining. Okay. Expectations 6 months hence. Consumers were less optimistic about the outlook for business conditions in January. 21% of consumers expected business conditions to improve, down from 23% December. 18.7% expected them to worsen, up from 17%. Consumer assessment labor market outlook remained pessimistic. 19.4% of consumers expected more jobs to be available, down slightly from 19.8% in December. 20.3% anticipated fewer jobs, unchanged from December. Okay. Assessment of income prospects, less optimistic in January. Okay. Okay. Let's continue. Consumers' assessment of their family's expected financial situation reached a record high. Interesting. So, how does that add up? I mean, if their income prospects are less optimistic, labor market outlook is pessimistic, business conditions are less optimistic, how does it relate? How does it translate to current financial situation, expected financial situations in 6 months to a record high? That doesn't make any sense. Perceived likelihood of a US recession over the next 12 months remained near series low. Interesting. Okay. The monthly confidence survey based on an online sample is conducted for the conference board by Toluna, a tech company that delivers real-time consumer insights and market research through its innovative technology, expertise, and panel of over 36 million consumers. The cutoff date was January 20, but we don't know the sample size here or the variance. Okay. Let's go to ACDC. Any other comments on the consumer confidence? If not, we're going to go to or retail or the durable goods sales, which also came down lower.
No, I'm good.
Okay. Then let's move on to GM results. GM stock is down 9% at $50 per share.
I guess the stock was just had just run up way ahead of itself because they did beat the earnings and had a pretty good guidance, right?
Yeah, yeah, that's interesting. They must have said something on the earnings call or something. So I'm not going to be able to listen to it here, but maybe we can do a watch party or something later. Um, But yeah, it's interesting that we've seen a couple of companies now beat top line, bottom line, but the stock drops. I think that's a really interesting trend. I only have a couple data points, so I'm not sure if that's the thing, but we should keep that in mind for this week as we read into um, a lot of next seven companies. I think Apple is announcing tomorrow too, and Meta, I think, is announcing as well this week. So, you know, I read an interesting tweet. Yes, was it yesterday or the day before? Maybe Sunday night or Monday. Someone said it's not going to matter what these companies announce this week. If Nvidia can't bounce, then everything will go down, and that's possible. I wouldn't be surprised if the weakness in Tesla stock in the last 48 hours was in part due to this kind of fear building around semiconductors. And now on top of that, you have GM also plunging 9%. So Tesla, whether you think of it as a tech company or an other company, the comps are not good in this earnings season. And I'm pretty confident that Tesla is not getting any sort of like a huge surge in orders right now, despite the Model Y refresh. So I guess we'll see tomorrow.
Was that tweet from a technical trader or a fundamental
I'm not sure. I don't remember who it
investor?
was. I don't know who that was. I don't think it's a technically invested there. All right. Q4 letter to shareholders. I would like to open the blah. Let's go through this. Screw this letter. Let's go to the full year release. I'll find a PDF. There we go. Earnest deck. Let's do that. And I can read through the press release or the financials and then do the conference call tonight on my own or something. Or maybe do a watch party, I'm not sure. And then we can talk about it tomorrow. Business updates. Total company revenue of 187, up more than 9% versus 2023, and CAGR of 10% since 2021. Okay. US market share 16.5%, up 0.3%, ending at 17.5% in Q4. The highest since the fourth quarter of 2018. So GM is doing really well in terms of market share in US. EV port look, I think this was a key comment right here from GM that also relates to Tesla, I think. EV portfolio variable profit positive in Q4, along with being the number 2 seller of EVs in the US in second half of 2024. EV portfolio variable profit positive in Q4. Now, who knows what's included in that and what kind of expenses they took out to be able to say that. But if indeed they achieve positive contribution margin or positive gross margin, it's not positive gross margin, that's for sure, because they're saying variable profit growth, profit positive. So that means the allocation of fixed costs is not there. So it's at best contribution margin. But that's still a good milestone because no one has been able to do that other than Tesla in the US. Now, possibly GM as well. Ford couldn't do it, and even Rivian couldn't do it. Okay, so all the fare that Rivian gets, they were not able to reach positive contribution margin um, except for the vans. Now, Rivian didn't announce Q4 numbers just yet, so we'll see. But this allows GM to be able to scale EVs. If this is true, then they can scale EVs. Okay. So we'll see what that means. US ICE dealer inventory at 53 days within the 50 to 60-day year-end target. Okay, so no inventory issue. EV dealer inventory reduced to 70 days. Okay, so they're working through their inventory. Record financial results, $15 billion EBIT adjusted, $14 billion other free cash flow adjusted. That's incredible. $14 billion of automotive free cash flow in 2024. I think Tesla did about 4. Ended the year with an outstanding share count below $1 billion. 1 billion shares, and returned $7.6 billion to shareholders. So they're doing some share buybacks, basically. Strong pricing and disciplined incentives. GM says 2024 incentive spend per vehicle as a percentage of average transaction price. Incentive spend per vehicle as a percentage of ATP based on industry estimates. Okay. Highest competitor is above 9%. It's more like 10%. I'm guessing that's Stellantis. They don't name it though. Industry average is about 7%. Lowest competitor is about 3%, and is GM below that. So GM is not incentivizing spend per vehicle as a percentage of ETV. They are the record low. That's interesting. That's interesting. Go-to-market strategy continues to separate us from most of our peers. Q4 incentives as a percentage of ATP, 3 percentage points below industry average. ATPs remained at $50,000 during the year, highlighting the strength of the portfolio. Number one position retail sales, fleet sales, full-size SUVs, and full-size pickups. Yeah. Reinforcing our leadership with all new full-size SUVs. All new Chevy Tahoe, Suburban, GMC Yukon XL with ATPs 5% higher than the outgoing models help sustain 67% segment market share in 2024. That's wild. So 2/3 of large SUVs is GM's. And that's obviously a very lucrative market. All new Cadillac Escalade is the best-selling large luxury SUV for the 11th straight year. Given some of the marketing materials here. New SUVs in the highest volume segments. Okay, ATPs 15% higher than the outgoing models for Chevy Equinox and GMC Terrain. So these are Model Y competitors. Both models feature a host of standard safety features, including emergency auto braking, intelligent high beam assist, and lane keep assist. Both come standard with premium infotainment and much larger screens featuring Google built-in. Okay. What do you think about so far ACDC? They're really killing it with large SUVs and SUVs as well.
They have a very loyal following, and what people don't understand is just like, Tesla's still a younger company and it has that following. These companies are legacy companies and they have a very, very strong following. And there's people who will buy those brands, go to the same dealers year over year. They have relationships with those dealers and with these cars. And I've seen a lot of people return to them.
So then why is it stuck down 9%? So let's continue. Leveraging our strategic EV portfolio to gain market share, our EV portfolio now has coverage across critical segments at multiple price points. Fastest growing high volume EV manufacturer, doubling market share in 2024. That is wild, right? At a time when Tesla is seeing its sales go down year over year. And I think in Q1 is materially lower. GM is taking market share from Tesla.
Well, I don't think it was just GM. I think pretty much every other EV manufacturer gained market share.
There's
last
nobody
year.
Who else manufactures EVs in US other than GM?
Everybody, like Kia, Hyundai, Rivian, everybody gained market share year over year except Tesla last year.
I don't know if Rivian did. And Hyundai, Kia are the same
year
company.
over year.
Yeah. Okay. Well, let's see. Equinox EV sales up 85% sequential in Q4 over Q3, moving into top 5 among all EVs in the US. Equinix EV variable profit improvement of $1,000 since launch in Q2 2024, driven by scale and battery costs. Okay. GM share of US EV market doubled throughout 2024 from 6% in Q1 to 12.5% in Q4. There's still no explanation of what variable profit means here, but okay. It is driving growth at Cadillac. Best Cadillac sales since 2016, with sales up 9%, driven by Lyriq, the best-selling electric mid-size luxury SUV per S&P Global Mobility in the US through October. Capture market share in high EV adoption coastal markets. Retail sales in California up 23% year over year, along with healthy growth in Texas, Florida, New York, New Jersey, and Pennsylvania. So California, New York, New Jersey, Pennsylvania are all liberal states. I mean, Pennsylvania, I guess, Republican, but it's a swing state. More growth opportunities in 2025 as Cadillac's EV portfolio expands. Customer deliveries of Escalade, IQ, and Optic EVs began in Q4. Distic EV launches in Q1, giving Cadillac an EV in every luxury SUV segment. Okay. Cadillac EVs in every luxury SUV segment in 2025. All right. So they're introducing more models throughout 2025. Okay. All right. Let's see. Achieved variable profit positive on our EV portfolio. Variable profit positive asterisks includes vehicle variable profit, emission credits. Okay. It's useful some credits basically. And advanced manufacturing tax credits. Okay. So it includes the credits. So that doesn't mean on a unit basis they're profitable. This is what Rivian is going to claim too. Look, we're profitable if you include all the emission credits and manufacturing tax credits. In 2025, we are experiencing a year-over-year EBIT tailwind at the low end of our $2 to $4 billion target. We are expecting a year-over-year EBIT tailwind at the low end of our $2 to $4 billion target based on our EV wholesale estimate of around 300,000. So that sounds like a guidance reduction to me. I don't know. Is that how you kind of read that too? Okay, I see a thumbs up. Drivers of improved EBIT expected from scale, fixed cost absorption, and a continued focus on cell and vehicle cost reductions. Okay, so not much here. They're moving in the right direction, I guess, and they're going to continue to scale. So I was very skeptical of GM scaling their EV production, but looks like they're going to make it on that front, unless if Trump removes $7,500 credit, and then that can turn back again very rapidly here for GM. Realigning our AV strategy, autonomous vehicle strategy, Super Cruise, expanding to 24 equipped vehicle models by the end of 2025. 360,000 enabled vehicles currently on the road. Expect to double that amount in 2025. I think it's about how many vehicles in Tesla's use FSD. 360,000. Industry first hands-free trailing capability, seeing a 20% attach rate after 3-year prepaid subscription period. Yeah, these numbers are very similar to Tesla FSD numbers. That's amazing. It's amazing. Give me 1 second. Okay, I'll pin this at the top here, this page. So Super Cruise versus FSD, we're talking here. Interesting. Any takes on this ACDC?
I'm just looking at some of the numbers. Would you believe that Tesla actually dragged down the year-over-year growth numbers for
Yeah, that's
last year
crazy. That's
for
so
EV sales.
crazy. That's so crazy.
Because just like you said, General Motors had a 50% increase. Ford itself had a 38% increase. And the industry as a whole had, I think, about an 8% increase year over year in EV sales.
Yeah. Where are you reading this?
A couple of these are from Cox Automotive. This other article is on Car Edge. And there's so many. I mean, like you were asking me who else makes EVs. I mean, who doesn't make EVs? You've got Acura, Audi, BMW, Cadillac, Chevy, Fiat, Ford, Honda, Genesis. I mean, I'm just up to H right now. I mean, everybody's making um, EVs of some sort or the other.
Right, but that's how many of them deliver in volume? It's only Tesla and GM, really.
Well, okay, so year-to-date sales, and this is going back. This is actually up to second quarter of last year's sales by Cox. It had Tesla at 304, third, yeah, 304. You've got Ford at 44. You've got
But Ford is canceling F-150 Lightning now, and that was most of their sales. So
right.
they're not really a player anymore.
I understand. You got BMW at almost 25. You've got Chevy at 20. You've got Kia at 27. So, and then there's a lot of smaller numbers. But what I'm saying is that these numbers add up, and I think that's what you're kind of seeing. It had to come to this point that people were going to start taking market share, and that's what we're seeing right now.
Right, makes sense. Can you read the top three numbers again, please, if you still have it up?
Yeah. So Ford at 44,000, Kia at 20. I'm sorry, Hyundai is actually ahead of them at 29,000, Kia at 27,000, and Rivian was at 27,000. You could call it
Or what's
tied
GM?
for
What's GM?
fourth. GM's kind of mixed up here, so they've got some under GMC, some under Chevy. So I don't know exactly what their
Yeah.
total is. I'll try to get that.
Yeah. Okay. Thank you. All right, let's continue with it. Refocusing on ADAS personal autonomy, leveraging AV investments to further develop Super Cruise and ADAS on the path to personal autonomous vehicles, moving to a foundation and end-to-end approach trained on massive and diverse data sets. Okay. 2025 guidance, $13.7 to $15.7 billion EBIT adjusted, 11 to 12 EPS, 11 to 13 billion adjusted other free cash flow, 8 to 10% EBIT adjusted margins, 10 to 11 billion capex and battery JV. Okay. 18 to 20% ETR adjusted. I'm not sure what that means. Okay. Key assumptions: lower volume and mix driven by modest decline in ICE volume, partially offset by higher EV volume. Interesting. So despite that, they have consistent profitability. So they're increasing EV volume, lowering ICE volume, and despite that, they have consistent profitability, or they're expecting it in 2025. We'll see if that happens. North America pricing down 1 to 1.5% and higher labor costs, DNA, and FX effects. So I don't understand. How is their profitability the same if they have lower ICE volume, North America pricing is down 1 to 1.5%, and higher labor costs? So I don't know how that adds up. Tailwinds: EV profitability improvements at the low end of our $2 to $4 billion EBIT year-over-year target, based on wholesales of around 300,000 units. I mean, this is what I'm talking about. They're selling 300,000 units in 2025 EVs. Um, versus Ford is not even a player, or Rivian, in the less than 50,000 range. Cruise savings of $500 million, favorable from other costs, warranty, commodities, and logistics. Okay, I get it now. and targeting profitable China equity income for the full year. They also shut down some China factories, I think. Other assumptions: guidance does not account for the impact of future policy changes by the new administration, including tariffs, tax reform, or other regulations. Full year EPS guidance assumes weighted average dollar share count of approximately 1 billion shares. Okay. GM Financial, $2.5 to $3 billion range. Interesting.
Yeah, man, Ford
Yeah.
sold about 285,000 EVs last
Oh,
year,
okay.
and that was a 38% increase from 23. So
Does that include hybrids then?
no, this is Mach-E, F-150. It does include their E-Transit in there also. So
And how many of that was F-150 Lightning though?
I'll try to get the breakdown.
Let me see. Ford plans to continue producing and updating the Mach-E. In August 2024, Ford announced that it would continue to sell the Mach-E along with other full electric vehicles like F-150 Lightning. But then they canceled F-150 Lightning. So
Have they completely scrapped the entire Lightning?
that's what I thought.
I'm not sure about that.
Let's see. Temporarily halted production November 15th to January 6th. I thought I heard that they canceled it, but let me see. Jimmy's coming up maybe to fix the record here. Jimmy?
Hey, yeah, Ford hasn't scrapped the F-150 Lightning. They put a hold on production for the next 3 months, so it will come back into production at the end of March.
I see. Okay, thank you. I stand corrected. Thank you very much. All right, let's see. Revenue, 187 billion. We talked about these already. Fourth quarter numbers. Okay. Calendar year performance. 6 million deliveries, down 0.2 million year over year. Higher deliveries and market share in North America, driven by strong product portfolio and demand, more than offset by challenging GMI market dynamics, largely in China. Okay. The one more thing I want to see here is lease returns type of data. Let's see if they have it. Average transaction price above $50,000. Wow. 2.7 million vehicles sold in the US, a 4% increase year over year, and the highest total since 2019. Chevy, GMC, Buick, and Cadillac all achieved sales gains. So why is the stock down 9%?
Yeah, man, did you say the EV segment was net positive?
Net variable profit, they say. So they exclude depreciation allocation of building equipment, etc., in the gross profit.
And where would you see the incentives and stuff? Because I know they
Yeah, it's in there.
did
Yeah.
give a lot of incentives, especially in the Mach-E in the
Oh,
fourth quarter.
no, that would be in revenue. So that would be included in the calculation.
Okay.
Yeah. Yeah. Liquidity, 29.3 billion, down from 33.3 billion Q3. But it's in line with last year's Q4. So there's some seasonality to it. Leverage ratio of 9.24x, more one turn higher than last year's Q4, 8.3. Leverage ratio higher, driven by earning asset growth and impact of impairment charge related to China joint ventures. Okay. Let's see. Trying to see. I'm looking at their free cash flow to see if there's anything to get out of this. $24 billion of automotive cash provided by operating activities. Okay. Expect to deliver consistent financial results in 2025. Strong ICE product portfolio will continue to generate robust profitability and cash flow. Expect EV profitability improvements will help offset pricing headwinds. We'll leverage our EV and ICE flexible manufacturing capabilities to follow customer demand. Anticipate year-over-year benefits from cruise and China equity income. Launching strong products in strategic segments to support margins, profitable growth, etc. Yeah, I honestly don't see why the stock is down 9%. Have you seen anything?
I think the market was looking for a higher guidance than what they kind of already provided. And like I've told you in the past, the research group that I follow, CFRA, they believe that they're going to have a little bit of headwinds and the comps for last year are going to be tougher. So they've got it on a hold at this price. So I mean, nothing bullish. I mean, and when the stock appreciates this much, you have to keep going the bullish tone going, right? So if you can't, it's going to give up some gains, and I think that's what you're seeing here.
Yeah. North America market share 17.5% in Q4. I think that's probably one of the highest in recent years. 17% in US. Brazil, however, down to 12% from 14% last year, and I'm guessing that's because of BYD, but I don't know. South America is also down. China also down from 8.4% last year to 6.9% this year. And Asia Pacific, Middle East, and Africa 4.9% versus 5.7% last year. That's amazing. That's incredible.
One of the other things that was pointed in that report was the lack of a good hybrid car portfolio within their lineup,
Hmm.
which I
Interesting.
think that's where the sales have really picked up, right? So
Right.
the brands
Right.
that have good hybrids out there are outselling everybody else.
But I mean, you would think, I mean, Ford is, I guess, focusing on that now, but Ford stock has been suffering lately. Did you see that? Ford stock is also down quite a bit today after GM announcement, down 4% at $10 per share. I mean, GM stock is actually doing fine, but Ford is in bad situation.
Yeah, but it goes back to, Ford's been giving out a 6% dividend, while GM has been also purchasing, the shares back. So they've held up their shares better than Ford because of that.
Yeah. Here's what Reuters says about GM. Exceeded Wall Street forecast on Tuesday, but investors still dumped the stock broadly on fears of tariffs that will make it hard for the automaker to hit its 2025 targets. Shares dropped more than 10% on Tuesday, putting it on track for its worst day since the early days of COVID pandemic in March 2020. Wow. Investors and analysts said GM's outlook is clouded by President Donald Trump's threats of tariffs and reduced support for EVs. Trump on Monday evening again threatened tariffs on a broad array of goods, including steel, aluminum, and copper, all materials critical to building automobiles. He also threatened heavy levies on allies, Mexico and Canada, which are key to U.S. automotive supply chain. The automaker projected net income of 11 to 12 billion in 2025, ahead of expectations of 10.8 billion. Interesting. So even the forecast was better than expected. But There's just a lot of uncertainty between tariffs as well as rules and regulations around EVs and tax incentives. With that uncertainty, that really isn't baked into GM's guidance at this point, said Jeff Wandu, financial analyst at Edward Jones. Mayor Bauer told investors on the call that she believes Trump, quote, wants to use policy and regulations in ways that will strengthen, not harm, domestic manufacturers like GM. Trump has said he wants to use tariffs to push companies to move operations back to the US, but such moves can take years. In the meantime, GM has an extensive playbook pulled together in the event tariffs are imposed, GM CFO said. The company had already started to bring vehicles in its international inventory in Mexico and Canada to the US, the CFO said. Every delivery that we can make before a tariff is instituted, it's that much better rather than sitting on inventory, he said. He did say, however, that they would not be able to make some decisions until they understand what the tariff environment will look like. There's things that we can do to balance plants, etc., and then there are things that cost a lot more money going forward, he said. GM's fourth quarter revenue of $47.7 billion surpassed analyst expectations of $43.9 billion. Adjusted EPS also exceeded forecasts. GM sold vehicles at an average price of $50,000. Okay. Company expected losses will narrow with EVs. Okay. Car maker does not break down EV losses, but said 2024 that revenue was higher than fixed costs, including labor and costs. That's not what. That is not what they said. Wow, Reuters really fucked it up. They literally said the exact opposite. That's crazy. That's crazy. Detroit car maker does not break down EV losses, but said 2024 that revenue was higher than fixed costs, including labor and material. That's variable costs. Metric it calls positive variable profitability. The figure does not include costs such as building assembly lines, but indicates financial progress in the EV rollout. Did not meet its goal of producing and wholesaling 200,000 EVs in North America in the year, instead ending up 189,000 units wholesale, Jacobson said. EV inventory fell from 100 days at the end of third quarter to 70 days. That's interesting. GM previously had forecast EV operating losses would narrow by between $2 to $4 billion this year from undisclosed levels, although Jacobson said the decline in losses was likely to be closer to $2 billion. I mean, that may be part of the reason why the stock is down, right? Maybe some tariffs uncertainty, maybe it's a bit of a guide down of EV profitability for future years. So GM reported pre-tax profit of $2.5 billion in the quarter, but reported a $3 billion net loss, mostly because of $4 billion restructuring charges. Okay. Well, that's it on GM. Anything else on your side, ACDC?
No, that's good. That's the past. Let's talk about the future.
Yeah. Curiously, so we have Wes here. I wonder what his comments are on GM's autonomous vehicle strategy. And I have the slide up on YouTube, and we can read through it again. I'm curious about Wes's comments. If he can come up, maybe he can share it with us. GM stock down 9%, Tesla down about 1%. Overall markets have pulled back a little bit in the afternoon trading. Max 7 companies are up. NVIDIA is up about 7% today. Very, very volatile. It's amazing how volatile this is. Wes, how are you?
Hey, good. I haven't seen what you're referring to yet.
All right, let me read you the slide from GM's quarterly earnings about their autonomous vehicle strategy. Okay. It's primarily
Yeah,
Super
sounds good.
Cruise. Yeah, Super Cruise, obviously. So here's what they say: expanding to 24 equipped vehicle models by the end of 2025 for Super Cruise. 360,000 enabled vehicles currently on the road. Expect to double that amount in 2025. Industry first hands-free trailering capability and seeing a 20% attach rate after 3-year prepaid subscription period. Are you impressed? Are you selling your Tesla stock?
Yeah, no. Yeah.
No? Okay.
No.
All right. So what do you expect Super Cruise will end up as, say, in a couple of years? How do you kind of see
Yeah,
Super Cruise?
I think it'll be left in the annals of history. As I'm aware, they don't have hardly any compute on board. They rely on a burned-in ASIC. So I'm not sure they're doing actual real-time inference that can be updated over the air.
Okay. What do you mean by burned in ASIC?
It's a compute that has a set amount of transistors organized in a way that the algorithm that resides on the local memory that's right next to the metal, that's right next to the transistor, only can do one thing. It only can compute in one way. And there's no way to update that algorithm. So the thing that they do is, I think, when they bring a car into the dealership or the service center, is that they update the application on top of that algorithm. Well, Tesla updates that low-level algorithm. That's the neural networks. They update that all the time. That's how we get this improved performance. The application on top of it could be considered, in relative speak, to be the visualization. So I don't think it's going to materially improve over time in these vehicles. They feel very static to me. So that's the understanding that I have right now of their system.
Thank you. Do you know if Super Cruise can change lanes on the highway?
I don't believe it can. I think the Ford system, Blue Cruise, can, but that also doesn't do, I think, more than 12 degrees of steering wheel angle, and then it lets go.
Okay. Let me see. Super Cruise. Hands-free driving assistance system that use sensors, cameras, GPS, and LiDAR to allow drivers to steer without using their hands. And make driving on highways more comfortable and convenient. Drivers can arrive at the destination less stressed and fatigued. Super Cruise subscriptions included for a few years with the purchase of a new vehicle. So GM says after the 3-year period, the attach rate is 20%. That's actually higher than I would have expected it. Do you agree?
I would think it would be higher, but I don't know what the subscription price is after 2 years. Do you happen to know?
No, I don't. So this now I'm on their page. Let's see this. Super Cruise is the first true hands-free driver assistant technology compatible roads now being offered on more Chevy vehicles. So they said in the earnings deck they want to do 24 vehicles in 2025. Okay. Select 2023 vehicles will now include additional features plus an expansion of compatible roads to bring your hands-free experience to the next level. Just marketing stuff.
Say, do they give a speed at all?
Oh, see, here's what it says. There's a video, 4-minute video. I'll watch it later. With an attentive driver and under proper conditions, Super Cruise can permit hands-free operation of the vehicle. The technology functions with OnStar and uses real-time cameras, sensors, GPS, and LiDAR map data to detect curves, helping to make long drives and commutes more comfortable. Let's go and enjoy one of the largest hands-free driving networks in North America. More than 10 million hands-free miles per month total. Users drive, I guess it says. Lane change on demand, Wes. By simply activating turn signal on select Chevy vehicles, lane change on demand will look for an opening in the desired lane and change lanes without any further input from the driver. Okay. Automatic lane change. When a slower vehicle is detected ahead, properly equipped vehicles can automatically initiate a turn signal. So they do lane changes. It's not just Ford Cruise, Blue Cruise.
Hold on, just to be sure, that's marketing speak. It says initiate. Does it complete it without explicit input?
Let's see.
That's a thing.
When a slower vehicle is detected ahead, properly equipped vehicles can automatically initiate the turn signal change lanes, pass the slower traffic, signal again, and return to their original lane without the driver
Okay.
ever
Okay.
touching the
Cool.
controls.
Wonderful. That's good. Good for them. That's good. That means that they can detect the vehicles coming from behind at a high rate of speed. That's great.
Okay. And then there's Super Cruise with trailing. This is the first time I'm hearing that, but I don't think that matters too much. So they compare to 4 Blue Cruise, Rivian Driver Plus, and then Tesla Autopilot. They say Tesla Autopilot doesn't have trailering that GM Super Cruise has. Anyway, I don't think that matters too much. Lane change on demand, automatic lane change, driver attention system, driver facing camera. Okay. Compatible road map. They have a map here, all the greens and everything. With over
I was
300.
interested in that. Sorry. I was
Yeah,
interested in which roads they support, under which conditions, all that. That's marketing
yeah,
speak too.
yeah. With over 300 million miles of hands-free driving in our rear mirror, Super Cruise leading and charging. Oh, they're leading again. Look at that. Leading. Mary led again.
I love it. Yay,
Yeah,
marketing.
yeah. OnStar service plan, active features, driver considerations. Proper driving consideration. There you go. Proper conditions and an attentive driver are required in order to activate and use Super Cruise. Make sure you're on compatible road with clearly visible lane markings, that your camera and radar sensors are uncovered, and ensure your eyes on the road so the driver attention system detects you're paying attention. There's active features, all that. How to use Super Cruise, turn on, lights on, hands off. When not to use Super Cruise. All right, here's the caveats. When you're now on a compatible road, during difficult or uncertain driving conditions, when lane markers are poor or visibility is limited, in a tunnel or construction zone, in slippery or other adverse conditions, including rain, sleet, fog, ice, or snow, on a road shoulder or service drive, when towing a trailer, unless equipped with Super Cruise trailing capability, on a freeway or highway exit lane. So they just do highways, basically. Just highways. But looks like they have coverage of all highways. I mean, 300 million, 1 million miles.
At all speeds, or is it capped?
It doesn't say anything about speed. Doesn't say anything about speed.
Yeah, because if they only support up to like 40 miles an hour, then that's not usable on highways unless you're in traffic.
Hmm. I don't think that's the case.
I don't think
Basically,
there's this. Yeah, I don't think there's this speed cap because there's isn't like Mercedes level 3. So
But
yeah.
why? All I'm saying is that it's omitted, so the detail isn't there. So the question remains open.
Okay. So right now it's available on 6 vehicles. Oh no, hold on. 1, 2, 3, 4, 5, 6, 7 vehicles, and they want to do 25 in 2025. It's not unsupervised. You have to supervise it, obviously. So you can't compete with FSD. So let's say, for example, Tesla introduced FSD unsupervised on the highways this year. I don't think GM is going to be able to match that. But they're doing lane changes, automatic lane changes, basically. So on these vehicles, it's basically as good as FSD, don't you think?
Yeah, FSD from 7 years ago. Sure.
No, FSD 13 that is on highways is basically as good as that. Then it can't do
I
all
would
friends.
love
If
to.
it can't do all friend on ramp, right? So to the extent that somebody, like, a lot of times what I hear from my friends is they'll turn it on. These are the people outside the bubble, right? They'll turn on FSD on the highway and then they'll turn it off as they're coming off the highway. So for that use case, it seems to me it's as good as FSD. What do you think?
It's just how well does it actually handle these highways? Does it let go in tight radius turns on the highway?
I don't know. Okay. Some FAQs, maybe they'll say the speed here. Are there any other limitations on using? Not available when teen drivers active. Additional supercars should never be used under difficult, uncertain driving conditions, construction zones, when lane markings are poor, where limited visibility, road shoulder, etc. Doesn't say anything about speed. Let's see.
Hey, if somebody,
How fast? There we go. How fast does Super Cruise know how fast to go? Super Cruise will use adaptive cruise control set speed. However, if you have not set adaptive cruise control speed when Super Cruise activated, it will use your current speed as the adaptive cruise control set speed. Super Cruise also will slow down around sharp curves. It doesn't say maximum speed. If somebody knows, maybe they can leave it in the live chat or in the reply.
yeah, or a video. If it show, I'd love to watch a video of whatever the latest version of Super Cruise is. I haven't seen one.
Yeah. Okay. I mean, how many highway miles are there in the US? Let's see. How many highway miles in the US? In 2023, the highway network in the US had a total length of around 4.2 million statute miles. Okay, so that, I mean, this 301 million mile thing has to be the miles collected, like the total miles driven on the thing. Or maybe with over 300 million miles of hands-free driving in our region, yeah, this is total miles driven. This is not the mapped highways. Okay. Wes, do you want to talk some NVIDIA or do you want to talk Tesla earnings?
I only have a few short minutes. I got like 5 minutes.
Any updated views on NVIDIA after another 24 hours of DeepSeek interviews and data?
No, I had a conversation with Meta, which was good. He was talking about the GRPO, kind of like the first pass run after pre-training. So I'm interested to see what I'm still interested to see what Hugging Face does. So that's still where I'm at with that.
Okay. Do you agree with the following statement? MI300X, it's still not fully ramped production-wise. Demand still exceeds supply for MI300X. Is that true?
Is that the AMD AI chip?
Mm-hmm.
Yeah. I don't follow that very closely because I haven't heard of any company adopting that for their AI production. For research, they're always looking at it, right? I did that with TPUs too. But for production, I haven't seen any usage. So I'm still looking out for that.
Yeah, my understanding is that all hyperscalers are complementing their NVIDIA GPUs with AMD MI300X.
Yeah, they do that as a hedge, not for production.
What do you
I
mean
have
as a hedge?
just to be sure that if NVIDIA ever pulled the rug out from under them or something happened with NVIDIA, that they wouldn't have to start from absolute bare minimum zero on another solution.
Mm-hmm.
So for
That's good
instance,
enough.
yeah, for instance, like AMD works with TensorFlow and PyTorch. So, some of that code is transferable, but obviously CUDA is different from their, I think it's called Rocket or something, which is their package, their library set. So that's all different coding, all different accelerators and whatnot. A lot of all their different tools. So it's also a huge ramp up. So for instance, none of the developers want to work on that because then they just get left in the dust from everybody that's working on CUDA, because that's where you want to be. Because you won't be at state of the art if you're not working on CUDA.
Okay. Do you know how much it costs to rent H100 today per hour?
No, I haven't followed that since I left cloud.
Mm-hmm. Is there a website I can kind of track that with?
Yeah, totally. I mean, I would, if I were you, I would go to AWS and look at what their AI optimized cluster rentals are. You can see that on their site, or go to cloud, or go to Google Cloud, or go to Azure, and just see what those rates are like. That's kind of the. I mean, they show all of the prices, like they're all straight
Mhm.
away. So they don't try to hide that because that's their bread and butter, and it's all public data. Like you can see it for TPUs. Like I actually wrote that page for TPUs many years ago, and it's still the same. At least the last time I
Mhm.
looked at it. So it's very straightforward, so that people know exactly what they're getting and how much it costs.
Can you guess the difference between AMD MI300X versus NVIDIA H100 today? Kind of like ballpark.
Well, just to be clear, like they do many different workloads. So the price might be actually fairly similar. I mean, when I say fairly similar, I don't think it's more than 20-30%. I would assume less than NVIDIA.
Mhm. What do you mean by they do different workloads?
So like NVIDIA does their GPUs and data centers, they can do, I think, right around 7 different workloads from like rendering to HPC to more like brute force compute of codec algorithms, things like that.
Mhm.
I can't remember all of them, but it's like seven
Mhm.
different workloads.
And
And
what is it for AMD?
AMD is largely the same, right? But they're just not as efficient. So that's what it kind of boils down to.
So how did you come up with 20-30% difference then? If they do the same functions, so you just look at the
Yeah, sure.
efficiency difference?
No, I'm more looking at the cost of not being the industry leader. So developers don't want to use it, like they will balk, even though like their PMs like me would be like, hey, like we need to hedge this. We need to spend some amount of time every week just making sure like we don't lose touch with this, that type of thing. And then once you buy in large quantities, NVIDIA will come in and discount their buys. So when you buy the stuff, they'll discount it, and then the cloud can turn around and then sell that for a lower cost. Especially if you've been on the compute and you have a contract for more than a year, they will come in and discount your second year up to like 20-30%, depending on lots of variables and how you use that compute. Anyway, like it's something that I know a lot about. I can talk on it for a long time, but that's why the difference is there, I think.
Okay. Do you have 5 more minutes?
Yeah, I'm looking. I don't see my buddy yet here
Okay.
at the courts, so yeah, I
Okay.
can do a little.
Okay. So um, you're saying AMD charges the cloud service provider 20-30% less, and the cloud service provider just passes that on to the end user. And you're saying that if somebody's using AMD, that's probably because they're trying to hedge, um, just not lose the
Yeah,
um, enterprise
largely.
expertise, experience, but they primarily want to use NVIDIA's chips.
Yeah, it's mainly because of the stack on top. It's way more developers partying on that code, and so it's always going to be state of the art. Like AMD is never going to be leading that until they make some breakthrough or make a larger bet on that code, which I'm honestly very surprised they haven't done yet. I mean, they should have done that 7 years ago.
Mm-hmm. So now AMD is coming out with new chips. And so you expect that price differential to remain, 20-30% price differential to remain.
Oh yeah. Yeah, totally.
And
Yep.
that's primarily because of CUDA. Okay.
Yeah, and all the other tools that go along with those chips. CUDA is just the big boy.
Okay. So let's say Microsoft is spending $20 billion a year buying GPUs. What percent of that do you think is going to NVIDIA chips?
Oh, the lion's share. More than 70%, if not more.
Okay. And you don't see that 70-30% split changing, 75-25, 70-30%.
No, there's nothing, in my opinion, there's nothing that AMD chips do better. We're talking about AI here, where there's nothing
Mhm.
that they do better. Just simply nothing. So there's no reason. There'd be no reason to buy those. Now,
Other
AMD
than cost, obviously.
CPUs, That's a different story. AMD
No.
CPUs.
We're just talking GPUs. We're just
Yeah.
talking GPUs and AI workloads. And obviously one reason is cost, but you're saying in terms of value, they don't do anything better.
Yep.
Their RAM is similar, right? VRAM, RAM, memories are similar. Is that not correct?
Yes, I believe so, but I don't know those specifics for latest generation. And my
Mhm.
buddy just showed up, so I
Okay.
kind of need to head out.
Okay.
But
Sounds good.
I'll rejoin. I'll rejoin later if you're still going.
Okay. Sounds good. Thank you. Talk to you later.
Thanks, man. All right, bye.
ACDC, any thoughts on the discussion?
Not really. I actually don't think that personally that AMD really competes with it. I think NVIDIA's counter argument really is if that demand that they had in the prior years is still going to be there. And the market, it may be giving it a little bit of a bounce back today while trying to digest the news, but the market is not convinced of that yet.
Yeah, I wouldn't say AMD doesn't compete with NVIDIA. I think AMD is a competitor. I think the MI300X GPUs aren't as. I mean, he also said 7 to 30%. So that 30%, most of that's going to AMD, I'm guessing. I mean, who else would it be? So that is competition, right?
Right, but what about all the hyperscalers who are already in the NVIDIA infrastructure?
I
They
think
can't.
they have both. I don't think they try to pick winners. I think they just try to get as much as they can. And my understanding is that because AMD was late to the party, they had to go, instead of 70-30, they had to go 90-10 or 99% with NVIDIA. And that's what's changing now, is my understanding.
What's your take on, there's two takes on the whole NVIDIA story, I mean, on the DeepSeek story as far as startups goes, right? One is that startups are gone, they're extinct. And the other is that this actually gives the startups, a cheaper way of getting there. What's your take on that?
Getting where?
Getting into developing a model, developing submodels, developing applications based on those models.
Yeah. I think that's probably true. I just don't know how that helps anybody, because just because you have $10 million doesn't mean you're going to be able to compete with OpenAI. I mean, your likelihood has increased, but you're still, in terms of raising capital, way behind. And if anything, it levels the playing ground a little bit. So it kind of hurts, in my mind, OpenAI, X, AI, and others, because now you're going to be, a small firm, a small team is going to be able to compete with you too, in addition to these top 5 players. So it just, I don't
Exactly.
really see how it makes, let's say, venture capital investing any easier in this space.
It doesn't, but I think it opens up more doors at a cheaper cost to some of the smaller players. What was the last
But
valuation
how do
of
you?
OpenAI?
But I'm not sure. But I think it's like tens of billions of dollars. But so okay, so let's say, for example, let's say you're a venture capital firm investing in this space. Do you change your investment strategy or what you're looking for after DeepSeek news? Or how would you change it?
Well, you can focus on people who are ready to adopt open platforms and build upon them. You can kind of look at your portfolio and see which ones can somewhat replicate that model, right? And I don't mean specifically replicate the model like of DeepSeek, but take that same methodology without going the high cost route. And then you
But
continue to
see,
fund those.
that's what I'm trying to say. Like that's methodology, whatever new methodology came out, GPRO, whatever, or GRPO, and reinforcement learning, which always has been around and all that stuff. This is available for everybody. So it's great for humanity, right? It's great for humanity in the longer term. But how is it good for any one company? If anything, it's just bad for companies who built these kind of walled gardens with tens of billions of dollars of capex that they invested. So all of that is kind of like worthless now in a way. Um, but that just like it doesn't really produce a winner. It just reduces the likelihood of the potential winners being winners in the future. I think that's the way I see it. So from an investment perspective, the only thing you can do is short the ones that seemed like winners before because of these walled gardens that now aren't there anymore. The moats aren't there anymore. The moats that they built. Like imagine, for example, with these car companies, right? One reason I invested in Tesla back in 2016 was their gigafactory because it takes multiple billions of dollars and multiple years to build one. And success is not guaranteed. It's actually very unlikely. So after Tesla built its own, I was able to say, hang my hat on that and kind of, buy shares in Tesla. Um, but imagine 3 years after, say 2020, all of a sudden, everyone can now produce batteries, and everyone can put up battery factories in a few months instead of several years, and everyone can produce batteries profitably in volume. How is that good for Tesla?
No, so it's not good for the big players, like you said. It takes the moat away. But I think in context of AI, it definitely adds value to the smaller players, right? Because we're talking about two complete different businesses. No, a small manufacturer is not going to get into the car business, but in the AI business, you could have small companies go to small businesses, which at other times would have paid for the moat and high costs, and now they can literally get tailored solutions through those smaller companies at a cheaper cost. So I think it helps. I'm in agreement with you there. I think it totally takes away the capex spending, the big moat around all of these. If OpenAI was a publicly traded company, you would have seen a huge, huge drop on his valuation. In fact, if he's planning to take an IPO, this is a big black mark on it.
Yeah, yeah. Anyway, all right. So we covered GM. We talked about Nvidia. Um, any final words on Sam Altman just posted a picture of him and Satya. That's funny.
Him and who?
Satya, the CEO of Microsoft.
What did you call the CEO of Microsoft?
Isn't Satya Nadella?
Oh, okay.
Microsoft
Yes.
CEO. Yeah.
Yeah. Same thing as Ashoka Shulk.
Oh, what am I supposed to say?
I'm just kidding. It's Ashok.
Okay. Um, tomorrow, Jerome Powell speaks at FOMC. Meta reports after the bell. Microsoft reports after the bell, and Tesla reports after the bell. So those are I guess Apple is next week. Yes, or it was Thursday. Let's see.
What do you see on Tesla's earnings? I mean,
Thursday. Tesla earnings. I don't know. I think deliveries will be lower this year, but we'll see. I think the challenges still remain. Primary challenges being high interest rates, people choosing hybrids over EVs, And I mean, just look at Wes. He said he thought that Super Cruise couldn't change lanes, and it does, and it drives on most of the highways already. And it comes with now, couple dozen, 2 dozen vehicles in 2025 by the end of 2025. So I don't know.
Yeah, I don't want to, interfere in that technical debate with you and Wes, but the way I look at it is that exactly what you said, that for the highway miles, the long distance drives, it's an adequate tool. It's not FSD. It's basically an autopilot, a little worse than an autopilot, but it's adequate for 90% of the usage. If you look at FSD's take rate among Tesla owners itself, I have FSD, and even I don't use it for all my local drives and everything. I feel no use for it. I just use it to more so when I've got time and just experiment with it. But for those people, it's an enhanced tool already. So those people who are already hung up on their ICE hybrid or even the GM brand EVs, it's a good addition for them, and it helps the brand, helps the product.
Yeah. Lucia.
Hey, hello. I had a question about GM and their autonomy effort. So, do you think they are going to develop autonomy in-house, or are they going to rely on NVIDIA or any other solution from a third party?
I don't know. Don't know. Looks like they can do about 1 million mile roads today. About a quarter of the miles in the US, highway miles. Actually, sorry, that's as of February 2024, 750,000. I'm guessing it's now 1 million, but I don't have a newer number here. Let's see if we can find it. Includes major and minor highways, as well as some rural roads. Supercruise was first launched in 2017 on select Cadillac models. The expansion will nearly double the number of compatible roads. Expansion includes minor highways that connect smaller cities and towns. Supercruise can automatically change lanes and work while towing a trailer. Over 80% of surveyed owners say it makes driving more relaxing. The last read is February 2024. Interesting that they haven't updated that number in the last year. It's weird. All right. Anything else? Otherwise, we're coming up to 2 hours here. All right. Well, thank you very much, everybody. I see no questions here. Thank you, and I'll chat with you all next time. Take care.